You've probably seen the headlines about gold. Its price is soaring to levels we've never seen before. But this is about more than just a shiny metal getting more expensive. In this explainer, we're going to dig into what this incredible price surge is really telling us about the world and about our money. So let's get right to it. First, just look at this number, $4,000 an ounce. That's right, spot gold prices have blown past that staggering milestone. Now, this isn't just some number on a screen. It's a huge deal that signals a very real and very deep anxiety spreading through the entire global economy. And that feeling of anxiety, it's captured perfectly right here. You see, this isn't a happy rally, not really. For a lot of smart people who've watched the markets for decades, a gold price this high is a flashing red warning light. It means fear is in the driver's seat. So what exactly has everyone so scared? Well, to understand that, you have to think about gold a little differently. It's kind of like a heart rate monitor for the world's financial health. It's what's known as the ultimate safe haven asset. So whenever you see its price spike like this, the very first question you should be asking yourself is, uh-oh, what's gone wrong? And a big part of the answer to what's gone wrong starts right here with the good old US dollar. For generations, the dollar was where everyone ran for safety. But that trust is beginning to wear thin, and now investors and even whole countries are starting to look around for other options. This brings us to a concept they call the debasement trade. It sounds complicated, but it's really not. Think of it like a seesaw. When faith in the dollar goes down, the value of gold goes up. You can see it right here. It's a simple relationship, but it is the absolute heart of the story we're seeing play out today. So, what it all boils down to is trust. When people start getting nervous about paper money, the kind printed by governments, they start looking for something real, something tangible. Gold is so attractive because it has no counterparty risk. And all that means is its value doesn't depend on a promise from a bank or a politician. It's just gold. Okay, so let's get specific. What's making the world so worried? I mean, this didn't happen overnight. It's more like a long trail of economic and political events that have been slowly chipping away at the financial system we've known for so long. Let's take a quick walk back in time. You can see a pattern. Back in 2008, with the financial crisis, gold first crossed $1,000 an ounce. Then, during the pandemic, it broke 2,000. But the real game changers, the moments that really shook things up, were the sanctions on Russia in 2022 and the political pressures we're seeing today. Each event pushed more people to question their reliance on the dollar. Let's break those pressures down. You've got political meddling with the U.S. central bank, which makes people nervous. You've got fears that new tariffs are going to make everything more expensive. But the big one, the real uh-oh moment for a lot of countries, was when those Russian assets were frozen. That sent a shockwave around the world, making leaders wonder if their dollar holdings were truly safe. All of this has kicked off what you could call a global rush to safety. So you have to ask the question, who exactly is buying all this gold? Well, it's not just everyday folks. The biggest buyers on the planet right now are actually entire countries, and they are buying it up in truly historic amounts. And would you look at this? We're talking about the world's central banks, places like China, India, Poland, buying about 1,000 tons of gold a year. Now, to give you some perspective, if you go back to the early 2000s, they were actually selling gold. This is a complete 180, a massive strategic shift in how the world's money is managed. And you really can't tell this story without talking about China. Right now, they are the biggest player in the game, the biggest consumer, the biggest producer, and most importantly, their central bank is making a very deliberate move. They're selling off their U.S. government debt and buying gold instead. The goal seems pretty clear. They want to build a world where the U.S. dollar isn't the only game in town. Okay, we're about to get into what all this means for you and your savings. But real quick, if you're finding this explainer useful, and I really hope you are, please take a second to hit that like button and subscribe to follow us. It really helps us keep these coming, and it means you won't miss any of our new updates. All right, let's bring all this back home. We've talked about governments and global strategy, but what about the future of your money? In the middle of all this, how can the average person even get involved with gold? Well, it turns out it's a lot easier than you might think. The big game changer has been something called an exchange-traded fund, or ETF for short. It's pretty simple, really. A company creates a fund, and they do all the heavy lifting. They buy tons of physical gold bars and lock them away in a super secure vault. Then, all you have to do is buy shares in that fund just like you buy a share of any other company. No need to worry about where to hide the gold bars. Now, you might be wondering, what about silver and platinum?
And you're right, their prices are climbing too. But there's a key difference. Think of it this way. Silver and platinum have a day job. They're used in industry to make things, from electronics to cars. So their value is tied to how well the economy is doing. But gold? Its main job is just being gold. That financial safe harbor we keep talking about.
Which brings us to the big question, the one that's on everybody's mind. With prices this high, this fast, is this all just a big bubble that's about to pop? It's a fair question. Anytime you see a chart go almost straight up, you've got to wonder.
But the thing is, this feels different. As this quote gets at, the things driving this surge, the global tensions, the shifting alliances, the shaky trust in currencies, those things aren't just going to vanish tomorrow. So the clamor for a safe haven like gold is likely going to continue. This rally isn't really a bubble, it's more like a mirror. It's showing us a reflection of a fragile, uncertain world, and it's making all of us ask what the future of our money is really going to look like.